Let's go and get started. So what do you do exactly? Are you like a day trader? Do you swing trade? Are you long-term trading? What do you do?
So I'm a longer-term trader. I consider it more of a position trader, and we take positions that typically will last from anywhere from 3 months to 3 years. It's all dependent on how well the company performs.
And also you're CEO of a company. What company is that?
So it's a small company called Brizio Innovations, and it is a publicly listed holding company. So we actually execute our investing criteria through that holding company.
With your company, do you long-term trade? So how do you find these companies? Do you look at technicals? Do you look at good?
Yeah, so we have a very set criteria, which I'll explain in a couple minutes. And what we do, it's all driven by financials. So we most of the work we do is up here in Canada, but the system would apply equally as well into the U.S. We look at every single financial statement that comes across on a quarterly basis. So we're looking at thousands and thousands of companies annually. And we're looking for certain characteristics that we believe make a good investment. And if they sort of make it through our screen, then we get quite active in further due diligence. That's really how we start. It's the financial.
So do you run like a service? So like people will like pay you for the portfolio and then you invest it from there, or how does your company work?
So I actually operate two different entities. One is the publicly traded company where we don't, we get our salaries, if you want to call it. We get paid on a consulting basis on that particular company. Then we also operate an investment newsletter, and it's a subscription-based newsletter, so we get paid based on fees we generate from our subscribers.
I guess in college, I'm curious what you major in. Did you major in finance or business or?
No, I actually majored in construction management, so something quite different from the financial markets. Actually, what I find in my experience has been that a lot of people who do well in this business don't necessarily come from a financial background. They come from a business background. They've operated businesses. They know what it takes to successfully run a business. And there's a fair bit of street smarts, I think, that are required to be a good investor.
Out of curiosity, even though your company, I know they do long-term trades, do you personally day trade or swing trade or?
So my background is I actually spent a fair bit of time as an investment advisor. So I was a broker for years in investment banking. And I did spend a lot more time day trading or short-term trading when I was in that position. But what I found over time is the amount of research that we do lends itself a lot more to longer-term trading. So we do almost zero day trading right now. If we hold the position for a short period of time, typically it's because the company actually isn't performing as well as we hoped it would. So we'd enter a position. If it doesn't do what we want it to do, we'll exit it very quickly. If it does do what we want it to do, we tend to hold on to it for very, very long periods of time.
Now, when you were like a short-term trader, what sort of like strategy did you use? Did you use like support resistant lines, or did you use like, I think if I read somewhere there's like the people like buy stock based on volume, and the price goes up. I'm trying to read into it, but don't.
Sure. So you're talking about what's called technical analysis, and there's a whole bunch of different sort of things you look for in technical analysis. Some is volume. Volume is typically one of many indicators you're looking for. Price breakouts or price breakdowns, those are other things to look for. And then a lot of times you can trade based on technical patterns. So everything from triangles to what's called head and shoulders, cup and handles. There's a whole bunch of different patterns that can sort of examine over time and indicate good buy or sell point.
Now, when it comes to those types of trades, though, like like binary events, they greatly, general stock directions. So how do you prevent binary events from affecting using technicals?
So our theory in the way we invest is that it's very difficult to be able to predict certain events. So your best ability to safeguard yourself from certain events, binary events or black swans or unknown events, it's all about pricing. You want to be able to buy something, an asset, at a low enough valuation where if something goes wrong, you're protected because of your sort of low price point, your low buy-in point. So that's really, we spend more time trying to make sure we're buying something at a very discounted value so that we don't have to spend time trying to predict things that are very difficult to predict in the future. So we try to stay away from investing in things that are based on a binary event. So for example, in the biotech space, when somebody's trying to bring a new drug to market, you've got to go through all sorts of FDA clearance. The idea of trying to invest in an outcome that could be 50-50 is not really, it's not something that we look for. So we really emphasize trying to find an asset that's undervalued and then trying to hold on to it until it finds its full value.
Now, have you ever traded options before or no?
I have. I've traded options. I've traded futures. I've traded almost every asset class in the financial markets.
Very good. Mm-hmm.
I was going to say what we found is that we really try to find an advantage that we can have over the rest of the market. And in the specific market that we invest in, we tend to invest in smaller companies. There's less competition on the smaller side, so therefore there's more likely to be more mispricing, which we're able to take advantage of.
Oh, so you buy low, and as stock price goes up, eventually you can sell for a higher price.
That's exactly it. And a lot of times, there's a phenomenon in the market that we actually find works better is you actually want to buy high and sell even higher. Mm-hmm. There's a real, it sort of goes against common knowledge, but if a company's starting to do well, it starts to reflect itself in the share price, and you want to be able to recognize that the fact that the company's doing well, and the best way to do that is by actually seeing the stock perform. So you're trying to find something that is already starting to show signs of accomplishment, and you want to just make sure it's still undervalued.
Now you said you wrote options. Did you ever buy options, or you just wrote them?
Yeah, we've done everything. So we've bought and sold options. It's called writing an option. We've done both from negative and positive sides of calls and puts. And then there's a whole bunch of strategies you can do around spreads and different potential outcomes. You can sort of engineer an investment thesis with options based on what you think is going to happen over a certain period of time.
For example, biotech, since it's a 50-50 outcome, maybe those prices, they go up by a bunch or they lose a bunch in value, depending if the market's good or not. So it would be a good idea to do a strangle position in the event.
Yeah, so you obviously have done a little bit of work on this. Yeah, so a strangle, a straddle, anything that the advantage of options is you know exactly how much you potentially could lose when you're buying options. So you can generate a position where if there's a tremendous move to one way or the other, you can engineer an option strategy that will capture that big gain, but limit the loss if you're wrong. So it's a fantastic way of playing binary events. Yeah.
Now, when it comes to options, I kind of learned the hard way. There's something called theta. So theta is the time decay rate of the option, correct?
Yeah. Yeah.
So
so those are all things that you've got to factor those in. So people who are very good at trading options. There's a lot of expertise that goes into sort of deciding if something's a good value or not. It would be something that I'd recommend that people gain a fair bit of expertise before they get too entrenched in it.
Okay, great. Let's see. Companies. Oh, what sort of sectors you invest in?
So we, because we're financially based, or we're driven by financials, how well a company performs, balance sheet, or income statement, we tend to work with companies that are obviously more advanced. So in the small space, you get a lot of companies that are startups where they don't have any revenues in some cases, let alone profit. So there's certain sectors that we stay away from, and that includes resources. Somebody's drilling for an oil and gas well. In a lot of cases, a new company won't have any revenues until they're successful. So we stay away from resources. And then we stay away from financials, because most financial type companies like a bank or insurance companies, they tend to not have a very repeatable type of business. We're looking for industrial type companies, whether it's software, whether it's in some cases healthcare, or biotech, something where if they've got a successful product, it's very easy to replicate and very easy to scale. So it's easier for me to say what sectors we don't get involved in, and that's resources and financials. But we're outside of that, we're agnostic. We've invested in software, technologies, telecom. We've invested in healthcare, industrials. You name it. We've almost invested in every sector.
For your newsletter, so how does that work? Do people just pay you like a monthly fee, or and you just like give them like stocks to buy, or do you?
Yeah. So what we do is we've got a bit of a track record that's recognized within our space, and we really have an expertise in Canadian micro caps and small caps. So our subscription is an annual subscription paid quarterly, and yeah, it's if we do well and the subscribers are happy, they continue their subscription. If we don't do well, of course, we expect that we'd lose some subscribers, but it's paid annual. Paid quarterly.
Sorry. So type of options. How do you think about this the Trump rally that's been happening like recently? You think it's gonna eventually correct itself, or I know they're in the Canadian market, so I'm not so sure if you're experiencing the same.
Well, the Canadian market mirrors what happens in the U.S. markets quite a bit. So we've been seeing I would say similar type of rally. It's our markets have been doing similar type of moves to what you guys have. The challenges in Canada, there's a little bit more resource focus, or a little bit more oil dependence, so that has an impact. But is over time, everything reverts back to a medium. And I think that's the case here. I think we've seen a decent rally. I think certain sectors have done better than others. I think over time, you're going to see markets sort of readjust to, back to the medium. But one thing that we're careful to do, we don't spend a lot of time looking at the macro events or the overall sort of economy or the markets. We look specifically, we do what's called a bottom-up approach. So we look at specific companies first, and then if there's some industry tailwinds, then that adds a little bit to our investment thesis. But for the most part, we really don't spend a lot of time worrying about the economy or the overall market. We really want to focus in on the specific company.
Okay, so stocks. I talked about the journal. And then, your investing company. I'm sorry, I didn't catch it the first time. So you take people's money and you invest in other stuff, right? And you just let the portfolio grow.
No, slightly different. So what we have is we have a set pool of funds within the company. So we don't take in individuals' investments. If somebody was interested in participating in the fund, they would actually buy shares just like they would buy shares in any other company. Our company is publicly listed, so it's freely tradable. So we work with a set amount of funds, and we go out and we seek out other investments that meet our criteria. And if investors and shareholders are happy with the performance, then ideally they would buy more shares in the market.
I guess what's your opinion on ETFs? I guess general general sector exchange ETFs. Sorry.
Okay, I've got. I'm not a big fan of ETFs. I'm actually not a big fan of mutual funds. I think if anybody wants to spend time, like obviously you educated yourself to some degree in the markets. I think you're far further ahead if you spend some time educating yourself and then sort of putting together a portfolio that suits your needs rather than trying to buy something that's sort of off the shelf. The challenge ETFs have and mutual funds have is there's a very smaller universe of assets that they can purchase. And because of that, they're less likely to be mispriced. So you don't get the kind of returns that you would if you were actively going out there and looking for more mispriced assets. You know, Google, for example, anybody can buy Google, but there's probably 20 analysts out there that have analyzed and overanalyzed Google. So how much more is a small investor going to be able to you know, what advantage do I have in buying Google? Whereas if I'm buying a company that's got a $50 million market cap, most of the big funds don't buy those companies and they don't analyze those companies because it's just not big enough. So we've got a huge advantage. So if somebody really wants to put in the effort, they can get extremely outsized gains if they go to where the rest of the market is not looking. And that's why we've done well, and that's why we're working in the market that we are.
Do you guys have any questions or no? Yeah. Yeah. All right, I think we're done. Can we take a quick photo? Would that be okay?
Sure.
Yeah, we're just gonna do it through the camera because there's something. All right, everyone, gather around the camera. We'll just do it through here, small camera. It'll fit. Just get the background. Yeah, do it here. I mean, you want to do it through there?
Yeah.
Okay, I can do it through there. I'll get my phone.
Can someone take the test? Yeah.
Oh, no one's. That's not. So internal microphone. Yeah, it'll be better.
Ready? All right, that looks good. All right, stand next. Ready? All right, nice job, boys.
I'm on the other one.
1, 2, 3. Let me do one more. Awesome. Thank you.
Okay, so okay. 1 minute for this.
All right, thank you so much for the interview.
You're very welcome.
All right.
Have a good day, guys.
You too.